Trump, tariffs, confusion, and stablecoins. Hi everyone, I'm Neil, and welcome back to Crypto Sense. It's been a tough weekend. Despite Trump's support for crypto at the Digital Asset Summit last Thursday, investors weren't convinced. His speech lacked clear policies and guidelines, leaving the market uncertain. Meanwhile, US stocks pared losses on Friday as investors tried to make sense of mixed signals from the Fed. And on top of that, Trump hinted at flexibility in his tariff plan set for April 2nd, adding to the confusion. This one looks like a tough cookie. Let's try to make sense of what happened during the weekend. We will discuss the market situation and try to get a bigger picture. Chapter 1: Bitcoin price movements and whale activity. First of all, let us take a look at Bitcoin's recent price action with the liquidation heat map. So, as the weekend began, Bitcoin's price dropped to around 83k, shaking up the crypto market again. However, after that, it gradually rose to the mid-86k range. During this period, we can see that many positions were cleared out, which contributed to this upward movement. From the CVD, or cumulative volume data, and Binance's order book, we can confirm that whales began buying Bitcoin when it dropped below 80k, which is a key point that we can observe in the markets. Additionally, if you look at the 84k to 83k range, we saw that sell walls were cleared, which indicates that the downward pressure was being removed, allowing Bitcoin to start moving upwards. Excluding the brown whale, other market participants seem to be watching and waiting. A notable observation from Binance's order book suggests that the market manipulation pattern, which used to push prices down, is now being replaced by actions that are supporting the price, causing gradual upward movements. In this situation, in the case of forces that Binance is managing a little more, if you look at the order book, you can see a peculiarity. Last time, I explained about the order book. When looking at the bigger picture, traders initially resisted, as you can see, but sentiment has now shifted towards support. In this part, you can see that this section of support has disappeared. As this disappeared, Bitcoin started rising gradually. In this case, there's a tendency to check the bottom once more. So, in the very short term, you can see that there was a noteworthy change in the order book for this movement. Since Bitcoin succeeded in a slight rebound of 86k, there's a lot of talk that when you look at the real price prop loss, it is a good section to buy when it reaches 0.1. In this case, it fell a little lower than 1, and this is data that reveals that the point was a good section to buy. You can see it, but in case like this part, the important part is that these things exist in a situation where the Bitcoin market is not over, which shows ongoing potential for growth. Bitcoin's slight rebound to 86k shows a typical pattern. It often confirms a bottom and then moves upward. So, short term, there has been a notable change in the order book, which is worth paying attention to. When Bitcoin's price is in a bad state, retail investors tend to sell, while whales are quietly accumulating. This is an important observation as these whales are absorbing Bitcoin during dips. Some people have asked why Bitcoin doesn't rise even though whales are buying. And this is because whales are not buying at market prices, but are picking up Bitcoin from those who are selling at lower levels. They are preventing further price drops by absorbing the selling pressure, which means the whales are setting themselves up for future gains when the market eventually turns upwards. Chapter 2: M2, TGA, and the impact of the US economy. So, in this way, the movement of global M2 money supply and TG funds is very important. For the record, M2 and TGA are key financial indicators used to understand liquidity in the financial system and how it impacts markets. M2, short for money supply broad money, is a measure of the total money supply in an economy. And the TGA, or Treasury General Account, is like the US government checking accounts held at the Federal Reserve. It's where the US Treasury deposits tax revenues and manages spending. Alright? Now, back to the story. Since the circulation of Bitcoin and Bitcoin or altcoins are rising, the increase in money supply is a very important part. So, if you look at this part, you can see that local funds are continuously flowing into the markets. The reason why this inflow is inevitable is because the debt ceiling in the US has been raised. So, in the case of the US Treasury, you can see that it is just withdrawing money from the overdraft accounts. These parts are showing movements that are affecting liquidity, and in the case of TGA, since the M2 money supply reacts to the market a little faster, Bitcoins or altcoins are making a low point and gradually trying to go up, and we need to recognize that these movements are being affected by this. So, the most important part is the release of local funds and the increase in the global M2 money supply. In fact, the actions of the Federal Reserve in the United States impact not only the overall money supply and Bitcoin, but also the US stock market and other economies worldwide. So we need to closely monitor the Federal Reserve's movements. When the Federal Reserve provides liquidity, the dollar index tends to decline. This relationship is inverse. As the Fed increases the money supply, the dollar index trends downward. And I want to emphasize that we need to focus on the Federal Reserve as the most critical factor. To put it simply, the US economy controls 24% of the world's GDP, a quarter of the world's economy, and that is why all other countries should keep an eye on it. Let us take a look at the recent news. On March 24th, the President Donald Trump is pursuing what he considers fair trade via reciprocal tariffs, many of which are going into effect next week against Canada and Mexico, and an added hike on China's tariffs. Honestly, a lot depends on the US stock market right now. Stocks seem to have finished their recent drop, which was caused by worries about Trump's new tariffs. And now everyone is waiting to see what happens after April 2nd. President Trump keeps his usual rhetoric, calling it Liberation Day for America, saying the US has been ripped off by every country in the world. And that is why he plans to create reciprocal tariffs, not with the immediate trade partners, but also to every other country. If this goes through, the market impact could be huge, not just for the S&P 500, but also for gold, which could skyrocket as investors rush to safe haven assets. As you can see, the Fear and Greed Index is more pessimistic than before, but still shows a neutral sentiment. Investors are cautious, not panicking, and the market remains stable for now. However, there is little optimism. According to Bloomberg, 66% of US consumers expect the unemployment rate to increase over the next 12 months, reflecting concerns about ongoing inflation, high interest rates, and the risk of recession. In the midterm, this could have the following effects. For the stocks, potential volatility as investors assess recession risks. Bonds, increased demand for treasuries due to rate cut expectations. Crypto, a mixed impact. Some may see it as a hedge, while others may move away from risk assets. Chapter 3. Stablecoin Takeover. There is also a very important thing, which is stablecoins. The growing market capitalization of stablecoins such as Tether is becoming a crucial factor in the market. These digital assets are increasing their holdings in US Treasury bonds, which could indirectly influence Bitcoin's price. One of the biggest obstacles in this cycle is the lack of liquidity release in the US. This has made the market more sensitive to global factors, such as the M2 money supply and the Federal Reserve's actions, ultimately limiting large price movements for Bitcoin and altcoins. A key question remains: how will the market perform once stablecoin regulations are in place? And now there is crucial information. The total market capitalization of stablecoins has now hit $230 billion. A striking figure considering the overall crypto market is currently valued at just over $2 trillion. While still small compared to gold, this milestone highlights the dynamic potential of stablecoins moving forward. And recently, Matt Hogan, the CIO of Bitwise, shared a tweet that caught my attention. He said, "I can't stop thinking about this," referencing a quote from Scott Bessent. Okay. "We are going to keep the US the dominant reserve currency in the world, and we will use stablecoins to do it." The idea behind this statement is that stablecoin companies, as many of you know, typically back their tokens by purchasing US treasuries or other US assets. This mechanism plays a crucial role in maintaining the strength of the US dollar. If the stablecoin market keeps growing, more US treasuries will be bought, which could help stabilize the markets and reduce short-term volatility. But it might also limit big price swings in assets like Bitcoin because more liquidity is tied up in stablecoins. This could make the market more predictable, but also bring in stricter regulations which could affect trading strategies and how investors feel. In the end, this will strengthen the US dollar's position in the global financial system. If you take a quick look at the largest holders of US treasuries, Japan is currently in the top position, holding the largest amounts. China comes in second among foreign countries. The UK hold around 723 billion, which I would consider a more friendly position. Additionally, Luxembourg is also on the list. And if you recall from last week's video, these countries play a significant role in the global financial landscape when it comes to US Treasury holdings. Tether is currently holding the 7th position as a net buyer of US Treasuries. Now, when the market is down and altcoins are taking a hit, Bitcoin recently retraced back down to $80K from a high of 108K. This scenario is happening without any regulatory alignment. But imagine where things could go if a stablecoin bill gets passed. According to political sources, we are likely to see this happen soon. August is the deadline that Trump has given to the House and Senate to get it done, and they have stated that they will get it done. So, let's wait and see. For crypto investors, this shift in regulations means that every investment decision could have a bigger impact than before. The conversation around stablecoin oversight is becoming a key part of discussions about financial security and growth. As regulations start to take shape, each investment will matter more, and investors will need to think more carefully about the risks and rewards in this fast-changing space. And before closing this video, there are two more news I want to share with you. First, BlackRock's BUIDL fund now holds a record 1.145 billion USD worth of ETH. This is a massive shift, and for crypto investors, it signals the growing institutional interest in Ethereum. It's another indicator that big players are positioning themselves for future growth in the crypto space, which could drive up the value of Ethereum and other digital assets. And to close with this video, let's switch gears and talk about some company news. Japanese investment firm Metaplanet has just made a big move by adding 150 bitcoins to their holdings, buying them at an average price of 12.57 million Japanese yuan, which makes $83,000 per coin. This acquisition cost them 1.8086 billion Japanese yen, which is around 12.1 million USD. With this purchase, Metaplanet's total Bitcoin reserves now stand at 3,350 Bitcoin, which they've built up over time at a total cost of 42.22 billion Japanese yen or 270 million USD. Their average price for all their Bitcoin buys is roughly 12.6 million Japanese yen, around $80,000 per coin. In March, Metaplanet also redeemed 2 billion yen, about 12.8 million USD, in bonds ahead of schedule, then raised the same amount by offering new bonds. This smart move has allowed them to boost their Bitcoin holdings while avoiding any interest-bearing debts. Looking ahead, Metaplanet's goal is to hit 10,000 Bitcoin by the end of 2025, and they have already picked up over 1,400 Bitcoin in just the first 3 months of this year. For investors, what Metaplanet is doing shows that they are in Bitcoin for the long haul. Their strategy makes it clear that institutional interest in Bitcoin is not just a passing trend, but part of a bigger plan to build up digital assets, expecting future growth and gains. And that's all for today. I hope you enjoyed today's deep dive into the crypto world. We'll do our best to keep you informed with reliable information every day. If you liked what you heard, don't forget to hit that like button, subscribe, and share with others. We really appreciate your support. Thanks for joining, and I will catch you in the next one. Stay safe and keep learning.